Boom, coming at you October 15th, 2021. This is hot off the press. The SEC has just approved the first Bitcoin ETF, and it's offered by ProShares, a company called ProShares, and it will be offered as of early next week. Retail investors will be able to gain exposure to Bitcoin. So why is this a big deal? You may ask yourself, okay, I can buy Bitcoin, Ethereum, etc. I can buy cryptocurrencies on an exchange. Why does it matter that there's an ETF? Well, a lot of people don't have cryptocurrency exchange accounts. They have a Charles Schwab, they have an E-Trade, and they're perfectly fine with that, and they don't like Bitcoin enough to be able to, to worry about setting up a whole separate account. But if they can easily gain exposure to Bitcoin with an ETF that's right on the shelf, that they can buy just like everything else, that's huge. The second reason this is a big deal is because it's a nod by the SEC. It's a nod by the SEC saying, you know what, this is safe enough. This financial instrument is safe enough. Again, the SEC's job, one of their main pillars is to protect investors. This is safe enough that we're going to prove it, and we're going to trust it. And we think it's safe. We think it's safe for investors. So there's almost like this boiling of the toad effect with Bitcoin. Like it just keeps marching on, just little by little by little. And I'm not just talking about the price going up. There's bigger things at play. To me, this is a bigger deal than the price going up 5, 10K, right? This is a nod by the foremost capital market, United States in the world, saying, okay, we want to give retail investors in a way to gain exposure to this. So in my opinion, this is a huge pillar in the march of Bitcoin continuing to go mainstream. Now, there's already been ways to gain exposure, and we'll talk about that, but not at the retail level, not at the institutional level, yes, but not at the retail level where your average investor, like I said, with a Charles Schwab account or an E-Trade account, can just boom, I'm going to gain exposure to Bitcoin. Okay, boom, that's the take. This is the No Gradient Podcast. This is Dick Lucas. Thanks for joining. You can find this wherever podcasts are available. Please, also on YouTube, link in the show notes to that. Please like, subscribe on YouTube, leave a comment, rate on Apple Podcasts. This helps gain exposure. This helps other people find the show. I'm really trying to build something here, so I'd appreciate the support on that. You can follow me on Twitter, Dick C. Lucas on Twitter and Instagram. You can also find me on TikTok. I published the first little minute of the show on there. Same with Twitter, so you can follow me on those platforms. I always post there when I have a new show dropping. Okay, let's get into it. So, what's interesting about this, and I got to give credit to, there's been some epic reporting by Bloomberg. I believe it was Bloomberg. In fact, it definitely was. Yeah, Matt Levine, his Money Stuff newsletter, which I'll link to. I'll link to all the stuff at the bottom of in the show notes. And in the summary on YouTube. So what's interesting about this is this is a Bitcoin Futures ETF. So what that means is it's different from, so there's a gold ETF, for example, where I think it's GLD is the ticker for it. When you purchase that, the underlying asset, there's a custodian. Someone's actually purchasing gold. They're holding that gold in a vault somewhere, and they actually have the asset on hand. Now, this is different. Now, this is a Bitcoin Futures ETF, not just a Bitcoin ETF. That means that the ETF isn't holding Bitcoin; it's holding a few futures contracts on a registered commodity futures exchange. The biggest one is the Chicago Mercantile Exchange, which as of 2017, late 2017. Began offering Bitcoin futures contracts. And Matt Levine does a great breakdown on his newsletter. Again, I'll link to this, where he says, well, okay, if you bust open an ETF, well, first of all, let's zoom out for a second. The ETF is an exchange trade fund, and it holds, it allows you to trade a basket of commodities, assets, and trade it like you would a regular stock. So you can have a healthcare ETF, for example, which has 20 underlying stocks. But it has a spot price, and you can trade it daily. You can trade it just like you would a stock, but it actually represents a basket of stocks or an index of stocks or commodities. For example, S&P 500 index ETF, when you purchase that, they take your money and then they buy more shares of those 500 companies. Basically, if you actually look at the breakdown, it's like 98% is in, or 99% or something like that is in the actual stocks, and the last percent's in cash or something like that. It's interesting to bust these open. So Matt Levine busted this one open. if you actually break open this ETF, you won't find Bitcoin. What you'll find is 30% of the money in a collateral, 30% of that money in there will be in a collateral account at a U.S. registered commodity futures exchange to collateralize positions in cash-settled Bitcoin futures. Bitcoin. So that's 30% of it. The other 70%, so futures contracts. And a futures contract is an agreement to buy a commodity or security at a predefined price at a predefined time. And I want to quote this because I thought this was hilarious. Kathleen Moriarty, who's an ETF lawyer, in this piece, a lot of people really don't understand how futures work. Kathleen, yeah, I probably fall into that category. I kind of get it. And we've talked about futures contracts on the show famously. Oil futures contracts went below zero during COVID when oil production was too high for the demand. And you actually had to pay someone, when it went below zero, you actually had to pay someone to actually take delivery of the oil, basically giving away oil. Not only giving it away, but actually paying people to take the oil off your hands, which is an interesting, encourage you to read more about it. Peter Zeihan was riffing on that. It was a fascinating thing. He actually predicted it before it actually went to zero, when it looked like it was going to zero. But yeah, really interesting. Anyway, so we covered the 30%. The other 70% will be in money market securities, so treasury bills or high-grade commercial paper, or whatever. So a money market, low risk stuff, boring stuff, commercial papers like short-term debt with high grade corporations, and treasury bills obviously are essentially risk-free. That's the risk-free rate. It's U.S. treasury bills, which the U.S. isn't going to default on their debt, so that's why it's called the risk-free rate. So how does this work? If it's not actually holding Bitcoin, well, how are you actually getting exposure? Well, the way it works is if the price of Bitcoin goes up, because it has that 30% in that securities contract, if the price goes up, it essentially allows the owners of this ETF, pro shares in this case, they can actually purchase more money market securities, and then if the price goes down, and effectively, even if it goes down to zero, then it gets washed out. So the price goes down. So it is tracking the Bitcoin price, though indirectly. Now there's a couple things here. At some point, someone is actually holding real Bitcoin. So this is what's so interesting about financial markets, like the fact you can have, an ETF that doesn't actually hold Bitcoin, that gives you exposure to it. So there's a couple issues, couple reasons why it's not great that it's not holding actual Bitcoin. So one, the main reason being it's just it's not as advantageous. It's going to cost you more money. You're going to actually get a worse price for the Bitcoin. So for the ETF. So let's say the price of Bitcoin's 50K. The spot price of Bitcoin's 50K. Maybe you go in at 51K or something like that is what you'll get in at this ETF at. And the reason for that is because the people that are actually, like I said, 30% of this is in the commodity futures, on an exchange. Bitcoin futures on an exchange, on a futures exchange. Now, I love it. A lot of people don't really understand how futures work, yeah. But if the people that are putting up this futures contract, that are the other side, they actually have to have the Bitcoin, and they actually have to not only put up actual Bitcoin, but they have to actually put up collateral as well, and they charge for that. They don't offer that service for free, so that's why the futures contract, they want to be able to get some compensation out of it. So that's why it's not just a 1-to-1 equal price of Bitcoin. Of the actual spot price of Bitcoin. You go check on what it is on Coinbase. It might be a little different than what you can get on these futures contracts. So that's why it's an interesting. So one analysis by, granted, take this with a bit of grain of salt, but by Matt Hogan of Bitwise Invest. He actually had a great tweet thread on this. But basically, this is over the course. This is gonna be, he said, as much as 6 to 12% or something higher your higher fees for actually using a Bitcoin Futures ETF versus just a regular Bitcoin ETF that is not approved yet. Let's be clear about that. That's not approved. That's actually holding the underlying. That's actually holding Bitcoin. So let's talk about. So there's the Grayscale Bitcoin Trust. So this is one of the, as I mentioned earlier, there's been ways for institutional investors to actually gain exposure. Now there's obviously cryptocurrency exchanges that work with some of the large banks and let them get exposure. Coinbase has a market doing this, or has a part of their business that's doing this. But there's also there's if you don't want to kind of do it yourself or purchase the Bitcoin yourself or etc., you can actually Grayscale Bitcoin Trust, which is a trust that allows you to gain exposure to Bitcoin, and they're actually holding the Bitcoin. They're actually holding Bitcoin, and they're in their custody. But there's a 2% fee on this, and it's only available to institutional investors. So that's a 2% fee. So your S&P 500 index fund, for example, is 4 basis points, 0.04%. So that's a healthy fee. Not only that, the Grayscale Bitcoin Trust, the price of it, you're not getting the best possible price. There's a you're getting fleeced on the spot price. So like as I described earlier, when you put $1,000 in the Grayscale Bitcoin Trust versus $1,000 of Bitcoin on an exchange, you're actually going to get a worse. You're not going to actually gain as much, own as much Bitcoin as if you just bought it outright. So it's an interesting. This is definitely we're moving in the right direction. So it's awesome that it's available to retail investors. I think that's really cool. The gold standard would actually be a approval of a Bitcoin ETF that actually holds Bitcoin. Now, the reason that they have not approved this yet, there's people that have been trying to do it. The reason they haven't approved this yet is because the SEC thinks this isn't as safe. A Bitcoin Futures ETF is that's the financial world understands that. The SEC understands that. It's 70% in money market funds, and then 30% in futures contracts. Futures contracts are the very well understood. And on the Chicago Mercantile Exchange, for example, there's been future contracts on there since 2017. And this is that's the most popular futures exchange in the world, and it's viewed as a not really a risky thing. Sure, the price of Bitcoin is volatile, and that's itself risky, but those actual financial instruments are not risky. The SEC looks at someone actually holding Bitcoin. They're not used to regulating this. They're not used to looking at a company holding a cryptocurrency and saying, okay, well, how are they holding it? What are the regulations around it? What's the security around it? Like, there's all these things that come into play when you actually talk about a pure Bitcoin ETF that's actually holding Bitcoin. I think within the next few years we'll see that for sure. It's just going to take a little bit of time. And like I said, this is that boiling of the toad. This is a step in that direction that I think a lot of people have just tuned cryptocurrency out because it went, it reached meme level in what was that, 2018, 2017, when it went up to 19K, when their mom was talking about Thanksgiving, Christmas. And then it just went, not as many people talk about it. Now the price is just going up and up and up and up. People care less, it seems, now than they did, a few years ago. And it's crazy. It's almost like, and that's almost a boon for Bitcoin, because the more boring it is, the more accepted it is, and the more it's not really a meme and some crazy thing. It's just like, yeah, okay, Bitcoin's going up, that makes sense. No one's freaking out about that. It's really establishing itself as a store of value and as a reasonable thing to not put a large percent of your net worth in. I'm not advocating that, but at least some of it. So it's a very interesting business. I'm always interested in what things like this where actual governments or actual regulation is where that meets the cryptocurrency road, because that's where the real world happens. We all live in countries with governments that have regulations, and as Bitcoin becomes more accepted, it's going to bump into these regulations and become regulated. And the more it does, the more accepted it's going to be. So it's this interesting, that's real. That's like real societal level shit right there. It's not, oh, Bitcoin moon. It's literally like, oh, okay, these are our elected leaders that have created these government institutions that are now talking about this thing that that for many years was considered, fucking crazy. I mean, it's still crazy. It's still mind-blowing, the fact that it's even worth over $1. That's my thing. The fact it's even worth over $1. Never mind 50,000, never mind 60,000, never mind 100,000, never mind 1 million. The fact is it's already insane that it has any type of value. It's absolutely fascinating. So I think it's a big step. I think it's a big step for Bitcoin. I think good on the SEC for doing this. I know Canada has a Bitcoin Futures ETF. Our neighbors up north have that. So I think that was about 1.5 years ago. So that was that's good for them. It's an interesting step. And now the SEC is doing it, which, like I said, the foremost capital market in the world, for them to be doing this. China just banned Bitcoin mining. And they're really starting to crack down on cryptocurrency. And what has the United States done? What has the SEC done? They've approved a Bitcoin Futures ETF to give regular retail Main Street investors the ability to gain exposure in a safe way, albeit, as we've discussed, not the best price. You're getting fleeced a little bit because it's not holding the actual Bitcoin. But it's a huge step in the right direction. Very excited. And as I was thinking about this, I was just kind of taking a step back here to leave you with this. Imagine you're locked in a room, when 08, 09, when the Bitcoin white paper was released by Satoshi Nakamoto, and then the open source version of Bitcoin was really, well, not the open. There's only one version. It's the open source version. But imagine you were just in a closet. This is kind of dark, but you're just in a closet. You're in a room, and all you have access to. You don't have access to any news. You have access to the internet, but the only thing that internet can be used for is running your Bitcoin nodes. You got this software, you're able to constantly update it. But you can't read anything about it. You can see from your node, you can see that people are transacting on it. You can see that there's several thousand Bitcoin worth a day being transacted. And all you can see, you're like, okay, people are using this, and you might be able to determine, okay, look how many nodes you're talking to. They're all over the world. But imagine you have no concept of anything else, and you're looking at your node, and you can see the transaction. By the way, I encourage you to run, you need about 350 gigs of space, hard drive space, 400 gigs. Get the Bitcoin Core app. Get it, run it, see what it's like. It's you can send I haven't actually sent money with it or sent Bitcoin with it. See, wow, look at that, money, Bitcoin. I've only used it to just, I have a node running in my living room right now. I've just used it just for fun to verify transactions. You can see which peers you're connected to. You can see how big the mem pool is. You can see how many transactions are pending. I think it was like a couple thousand a few hours ago. So it's an interesting thing. I'm always an advocate of actually going through this and actually using the software. So imagine you're in that room and you're just looking, and you just have you're like, yeah, people are using it. There's people all over the world, but you have no idea that it's actually valued at, it's a self-contained thing, right? Bitcoin it's not talking to anything else besides other nodes on the Bitcoin network. It's not like an API that's talking to other banks. You have no concept. You have your own Bitcoin world, and you can see that there's a bunch of wallets and people are transacting with it, but you have no concept of what the price is. Like all this stuff happening around Bitcoin. Bitcoin is like this very pure kind of piece of open source software that nodes are talking to each other, and there's mining to verify the transactions and verify the longest chain. That's how it stays secure. But you just have no notion that around the world, there's all this infrastructure being built around it. There's cryptocurrency exchanges that allow you to convert it to fiat currency and back, that allow you to convert it between other cryptocurrencies. There's now a Fukin ETF around it. Like there's all this infrastructure. There's all these people talking about it. There's all these publications built up around it. There's everyone and everyone and their Fukin mom is like, and the crypto Twitter's like exploding. There's all this shit happening, and all you can see is, okay, there's a bunch of transactions per day, about $6 billion USD worth, but you have no idea that it's worth that much because you don't know the price of Bitcoin. You're just looking around and you're like, okay, people are using this. That's pretty cool. my point is this, is that if you just look at that, you probably might think, okay, this is pretty successful, but you would be blown away if we opened that door and said, yo, bro, you know that little node you've been running that you've been updating every few months and you've been watching the transaction through? Come take a look. And we show you some headlines. We show you the actual prices. Someone pulled you out and said, one Bitcoin's literally $60K, $60,000. That would be absolutely mind-blowing. It's an absolutely mind-blowing, this is like, it's still, this is why I love talking about this stuff, because it's just so fucking fascinating. The tech angle, the societal angle, the government angle of meeting this new technology that's never been, it's a problem that's been trying to be solved several decades. Bitcoin was not the first peer-to-peer cash decentralized cash payment system or cash alternative system. Other things have been tried, but it is the first successful one. It's the granddaddy, and it's an absolutely fascinating project. So I'm very interested in Bitcoin. I don't know if the price is going to go. Who knows what the price is going to do, honestly. I try not to speculate too much on that, because people that just talk about the price, I'm like, this is a little bit bigger than that. But obviously the price is important. If it was worth $1, that's very different than it being worth 60,000. Generally, I would say don't invest any more than you're willing to lose. Full stop. Or lose a significant amount. At this point, I don't think it's going to zero. It's nothing like that. But be ready to stomach, or better yet, not willing to lose, because people say, oh, well, I'm not going to lose it all. Be willing to stomach a 50% drop, 80% drop. If you're not, don't put any money that you're going to need in the relatively short term to actually, put it in Bitcoin or any cryptocurrency for that matter. I have enough exposure to Bitcoin, but not so much that I'm worried in checking the price. I don't ever check the price. If you have to, again, I talk about this all the time on the show. If you have to check the price every day and worry about it, then you're missing the whole point of what this is. We're not missing the whole point, but it's just stressful. Do you really want to live your life that way? And plus, I'm not saying don't educate yourself about Bitcoin and read and follow the news and stuff, but the price is one piece of it. There's all this other stuff happening around it that is super interesting. Obviously, the price is a part of that, and the higher it goes, I think that means people have more trust in it. So it's a good kind of litmus test. I'm not saying the price doesn't matter at all, but I am saying there's the tech itself is so fascinating. How it's actually being used, the layer 2 stuff being built on top of it. Like, where's the world of Bitcoin where I'm actually I'm sending someone Bitcoin like I'm sending someone Venmo, right? Where's that world? I don't know if we'll ever get to that with Bitcoin. Maybe with the layer 2 solution, but it's still Bitcoin, and that's not. I'm not sending someone $4 worth of Bitcoin when they buy me a cup of coffee. It's just, and that's part of what we talked about. It's part of what we one of the episodes that's coming out will be talking about Coinbase's new crypto regulation proposals, and part of that is just how the government treats it and how they treat people that transact with it and how it's taxed and things like that. So there's some questions that need to be answered here as well. So it's a fascinating world we're living in right now. It's fucking epic to be a part of. Beautiful, amazing technology. We'll see what happens with it. Thanks for joining. This is Dick Lucas, No Gradient Podcast. You can find this podcast wherever you get your podcast. Just search No Gradient. Please appreciate you rating on Apple Podcasts. Rate it. Comment. Let me know. Give me feedback. Dick@nogradient.com. Give me feedback. Hit me up with proposals for what you want me to talk about. Also available on YouTube. Post a link in the show notes for that. Also, Dick C. Lucas on Twitter and Instagram, and just Dick Lucas on TikTok. On all three of those platforms, whenever I post something new, whenever I post a new show, I always post on there, so you can always get the get notified that way. And also, you can ping me on those platforms. Let me know if you want me to riff on something, if you have questions on something. Would really appreciate it. And also subscribing and liking on YouTube. That'll help gain exposure, help other people get exposure and to the stuff I'm putting out. I really appreciate trying to build something here. So thank you everyone for the support. Much appreciated. Anyone that's ever texted me, email, one love. Honored that you're listening to me even speak for a few minutes on some random topic. So it means a lot. Thank you. This is fun as hell. I gotta go publish this. Thanks so much, babies.